Hello, founders. Welcome. We are here with our newest edition, and I'm super excited to introduce Dorian Dickinson and help all the rest of us at the Startups.com community understand where Dorian Dickinson's coming from in terms of his experience as a founder, fundraising. We're going to talk about sustainability, all that good stuff. Dorian, welcome. Thanks for doing this.
And thanks so much for the warm introduction. I'm looking forward to our conversation.
Let's do the too long did not read version of this and talk about how much have you raised for your current startup. We'll get into detailed startup in a moment, but how much have you raised so far?
985,000 from that point of it to get us kicked off.
Was it pre-seed, seed? What stage were you?
Seed from that point. From there, we did some pre-seed that was self-funded, and that's not included in the 985. So actually, we're over the $1 million mark in fundraising already, and that's just getting us off the ground and allowed us to get regulated.
You've got skin in the game and you've raised money. Have you raised from VC? Was it angels, family offices? Where'd the money come from?
Yeah, angels and more friends and not family, but the friend side of it, as well as some angel investing.
Because this isn't your first rodeo in terms of business is concerned. So if you had to kind of describe for other founders, what's it like out there to try and raise $1 million?
Yeah, I kind of put that part of it out of my mind as to what the dollar amount is. And you're right, this wasn't my first rodeo. No rodeo is easy. Let's get right from that start. And you've got to be prepared. You got to give the investors what they want to see. You've got to be able to look at yourself and look at what you've got there and be able to say to yourself, if somebody gave me this and I had money, would I invest in it? That's the number one thing I see of what you have to do when you're out there and you're trying to raise funds. Is take yourself out of your own skin, put yourself in that investor skin, and why would they invest in you?
Let's not leave everybody in suspense. You've raised money for your startup that is now going to help other startups also raise money, which is exciting. Tell us what you're building.
Yeah, that's exactly it and what we're doing here. So I founded Funding Hope, which is an investment crowdfunding platform that was developed specifically to connect investors with founders and small business owners who are contributing to sustainability in disadvantaged and rural communities all across America from that side of it. I really developed this platform to be able to get into the communities that need the funding the most, reach the founders who need the funding the most, and who have historically been left behind by big banks and Wall Street. Kind of give them that platform where they can go and they can get their information out there, and we can actually then help market their business and be able to then attract investors to them. I know full well how hard it is to run small businesses and get them set up. By being able to actually do that outreach, be able to help them find additional investors, that's the purpose of why we developed Funding Hope.
There are multiple components to what you just said. Let's break down each one. I think a lot of founders and investors at the same time get confused of the term crowdfunding. There's rewards-based crowdfunding that you would get something in like a Kickstarter or an Indiegogo. And then there's equity crowdfunding as you would get in WeFunder, Start Engine. Which one are you?
That's right. We fit in the equity and debt crowdfunding aspect sector of the industry. What we allow them to do, we allow founders to either set their own terms. They set it as whether they're willing to give up equity, whether they're going to give up debt, whether they're going to raise funds through a convertible practice or convertible note or safe. So we let them set the terms. They also set their own interest rate. They also set the percentage of equity that they're going to give up because it's their business. They know what they can afford. We're trying to empower small business owners and founders to really build their business from the ground up.
Now, last I heard, you said you had something around 12,000 investors who are signed up. How does that work? Are they just sitting there waiting for you to feed them deals? What's the relationship?
Yes, nobody ever just sits there, right? So what we've done is we've engaged them from the beginning. We've gone out, we built that wait list of investors by telling them what we were building, telling them that we're going to be coming online, getting the issuers ready to be launched right now. We have companies that are in due diligence right now, going through the process of being able to be listed to raise funds on our platform from there. And yeah, we're now over 14,000 in our wait list of investors that are out there. So, that's what we're bringing to the platform. That's one of the differentiators that I wanted to set up with Funding Hope when we're building this, is that we are a platform that's out there to facilitate that relationship, but we're not the platform that's saying, hey, we've got a platform, go list your business and then reach out to your friends, families, and customers and raise your funds. We also know that we have to bring additional investors to the table, and that's what we're going after. We're looking at the businesses that'll be raising on the platform, and every business will be treated the same, and we're going to go out there and we're going to help try to find those investors for them.
And what particularly are your investors, the 14,000, looking for?
All of our investors are really impact focused. When you look at the Funding Hope platform, that's what we're built on. We're built on helping to achieve UN Sustainable Development Goals in these disadvantaged and rural communities across America. So we're really focused on trying to find investors who want to give back. They want to make an investment. They want to see a return, and they want that opportunity to be able to give back as well.
And what size of checks are we talking about here? Because Reg CF is a little different in terms of what checks you can take in, how much you can raise.
Yeah, so I mean, it's really going to depend on the investor side of it, and you're right. There are regulatory restrictions on the check sizes of what they can be. Accredited investors can invest in whatever they want to invest. Non-accredited investors, who are investors, everyday investors that are out there who might not have $1 million in net worth, excluding their personal home. These investors can invest up to a small percentage of what their annual income is, and it's based on that, and it's based on the entire, and the platform will lead you through that if you're going to be an investor in one of these businesses. But a minimum investment of $100 into a company, and then it grows from there. So it's finding multiple investors to be able to help the founder achieve their goal.
And we're going to talk about the mechanics of how this works, because I know founders are going to get super excited and say, wow, 14,000 investors, I can't wait. Reg CF is a little different. So let's break this down for everyone watching who might want to explore this option. An accredited investor, as you talked about, Dorian, is an individual with $1 million net worth, excluding their home, is a sophisticated investor, and basically is able to say, yes, I'm sophisticated, I understand the risk, and here we go. And they're able to look at deals. They're able to be approached in a specific way. But if you want to go to the crowds, which is the reason it's called crowdfunding, you want to put out there and, hey, just chunk down $500 or $1,000, and everybody pretty much participates together as part of the crowd. So it's the same as reward crowdfunding, where you would pay for a product up front, but you're really getting equity or you're buying into some debt, different things like that. And so the regulatory challenges are different. The compliance is different. Dorian, walk us through what's the difference and what should the founder be prepared to do if they want to do Reg CF versus Reg D?
What the founder is trying to do with crowdfunding is to actually attract that crowd to their investment. They need to be upfront. They need to be honest with them, with the investors, as to what they're actually offering, what the status of their company is. They have to show their financials. They have to show their business plan. They have to show their pitch deck. They have to file a Form C with the Securities and Exchange Commission to get all of that information out there with the public, so that the public understands these investments are illiquid, that there is the potential for loss, including up to the amount that they've invested. And we're very upfront about that as a platform. We are an SEC registered, FINRA member, crowdfunding portal. We have met all of the regulatory requirements of the US government to make sure that we have a company that's out there. We have done our due diligence on the company to make sure that they're a valid company, that they are telling the truth, and that they have that track record that they're telling investors when they move forward with it. So they have to be prepared. This isn't just saying to somebody, hey, I want to raise some money. Will you give me some money? There are procedures and processes that they have to go through. And depending on how much they want to raise, if it's up to 624,000, okay, they have to produce their own financials and get them out there. But if they're looking to raise $1 million, $2 million, $5 million on the platform in a 12-month period, they have to be able to show audited financials that have been certified by accountants as well.
And they have to use your platform. I just want to be very clear with all the founders.
They have to use a regulated platform to raise funds through Reg CF.
I have a fellow founder who's a YouTuber, and I love the guy. His energy is amazing. But I was watching one of his videos, and he was just saying, thank you, everyone. And if you want to invest in my platform, right on the YouTube channel, and he had his number, and he had a call to action at the bottom. And as soon as I saw that, I contacted him, and I said, hey, by the way, just letting you know, you just broke a bunch of laws with that, exactly. And you could go to jail. So just, you don't want that to happen. Your YouTube channel can basically be revoked, suspended, all that stuff. This is not things you want to mess around with. The SEC takes that very seriously. Even if you are Reg CF and you've filed all your forms, your exemptions, even the things you can and cannot say are regulated. And so I just want to make sure that every founder listening to this understands what they're getting into. There are going to be legal fees. You are going to have to do a lot of work to prove to the regulatory bodies that you're not a scam, which is very important. And so how much support do you give to founders to make sure they're dotting their I's and crossing their T's?
Great question. And we're with the founders right from day one. We'll provide them with the list of the things that they need to be looking for, what they should be prepared for. Everybody wants to raise capital, but you have to be prepared to raise that capital. So we want to give them exactly that touch points, those touch points, and that bullet list of what things that they need to do, from preparing their marketing to getting their pitch deck correct, to making sure that they have all the filings done. When do they file the Form C? Making sure they know what their corporate structure is, who the directors are, making sure all of their backgrounds are clear, because the backgrounds will be checked to be able to raise funds through this. We provide them with what the investor educational materials are that the investors are going to see, or potential investors will see, before they make an investment in the company. We also make sure, and we're required to have an open platform and open communication between any potential investors and the founders of the companies, so that they can reach out through our platform, ask questions, and then the founders respond. And we also let the founders know how important it is to respond to those questions when they come up, and then to continue to keep that communication alive with investors. Where's the best place to raise more money when you want to raise more money? From your existing investors. Existing investors are only going to invest in you again is if you stayed in touch with them, if you've kept them updated, if you've given them a path forward, show them what you're doing with the money they gave you in the first place.
Let's talk about existing investors then. Reg CF, if I'm going out and I get a VC or an angel and they cut me a $500,000 check, that is different than 1,000 investors cutting me $500 checks each a piece. And so Reg CF companies use special formats, and they use a different way to manage all those investors, because you don't want to have 1,000 investors that you're trying to work with unless you're a publicly traded company. How do Reg CF companies, and how in particular are you advising companies to manage all those investors?
You can treat your Reg CF investors as one investor on your cap table and be able to reach out to them that way. So you don't have 10,000 people on your cap table and having to reach out to them individually. So you kind of do that and you run it through your raise. So that raise through Reg CF, that counts as in your cap table as an investor from there. There is other software that's out there, Carter and a few others, that can actually help manage your cap table if that's what you want to do. So we'll give them the options, and we let the founders make the decisions. It's their business, and they know how they're going to grow in the future from there. And we encourage them to find qualified financial advisor or accountant, as well as good legal team, to be able to help them through this process to make sure they stay compliant. Because after you do your raise, each year you do have an SEC form you have to file to make sure that you remain compliant. If you don't file that form, you can't go back and do another Reg CF raise or an A or D raise.
And I'm assuming that you've got contacts and referrals to lawyers and people that can help out.
Yeah, we can give them a list of the people that we have seen, that we have vetted, that we know are out there, and work with them. We don't take compensation from them. So these are all for the founders to be able to choose from there.
And how much does this cost? What are your fees on your platform?
It's one of the other differentiators with Funding Hope. Reg CF platforms tend to be about 7 to 9% of what the raise is that they're going to take. Very often there are additional fees on top of it, credit card processing fees, sometimes just a fee to set up your company on the platform. Funding Hope charges 4% of the capital that's raised after the founder reaches their initial goal. So if they don't reach their initial goal, we don't make any money either. So it's very important for us to make sure that we're working with the founders to help along the way. So we charge the 4%. And then the only other fees that we charge are the due diligence fees for escrow that are tacked on at the end, and those are just direct pass-through fees from what we're charged by the escrow companies.
I just want to encourage everybody, when you're out there, go look at all the crowdfunding platforms. They all function a little bit differently, and there's ins and outs of each one, advantages and disadvantages. I think that there are some really great entry-level ones, and then there's some really advanced ones. And then you've got all these different services where people come in and said, I'll do your marketing for your investor relations, and just make sure you do your homework and check things out there. But I want to talk about what makes Funding Hope different. And that's all about this sustainability, rural, these underserved, underestimated, underrepresented areas. Lay that out there in terms of this is where Funding Hope is going to be different, and the types of listers or companies that you want to raise funding for.
You're spot on with saying that founders should look at a number of crowdfunding platforms when they do it. We encourage people to look at our competitors, look at the other platforms. And if you come to us and you're not right for us, we're going to be the first ones to tell you you're not right for us, but you might want to look somewhere else. You might want to look at a different platform, or you might want to just go out to private equity and try to raise your funds that way from there. So what sets us apart is we're the first and still the only FINRA member crowdfunding platform that was developed specifically to connect the investors with founders who are contributing to sustainability, helping achieve one of the UN Sustainable Development Goals in disadvantaged which are distressed and at-risk zip codes or rural zip codes across America. So we're very much focused on that niche of being able to help investors connect with founders in the communities who have historically been left behind by the big banks in Wall Street. That's what sets us apart from that side of it. Building sustainable businesses in these communities, we know, is the key to creating healthier, cleaner, and safer communities where they are.
Let's be super clear and break this down. You're not just looking for founders that can assist these communities, but if you have a business in one of these communities, you can also receive funding.
Yeah, being either working in, being there, having a physical presence there, or working in the communities by being able to help those communities from the work that you are doing. Good example might be an electric vehicle charging company who's looking to raise capital, but they know they want to put their hardware in communities that are underserved. Well, then that would help them qualify from there, from that side of it. How they're building local jobs, how they're actually getting economic development opportunity into these communities is what we look at from there.
Let's give some other examples. I'm thinking about a co-founder pair, myself, who've created a medical device that they want to distribute for free in these rural communities to be able to predict health issues and save the money and prevent mortality. That would qualify.
That definitely qualifies to meet where we are. Now, if this is a for-profit company, they have that opportunity to raise debt or equity. If it is a not-for-profit company, they can come onto the platform and raise it as debt.
Okay, let's say I've got something that's a little less altruistic. I'm making, I don't know, toys for kids, or I'm making video games, but I choose to open a factory, or I choose to open some type of operation where I'm going to be pulling in people from these rural communities to work for me because I've got a special way of production and I have no problems in going into a place where there might be a different type of talent pool. Let's say I open in like a major metropolitan area, that also qualifies.
Absolutely, that's right. You're creating local jobs in these communities, and local jobs then creates local stores, which then helps create local schools, makes the community safer, brings in better public lighting, and helps drive the economic impact in these communities. Absolutely, that's where it is.
I really admire and appreciate what you've done. Let's talk about you. So, what made you decide? Because we've talked, and it's very clear you could be doing a whole bunch of other things and probably making gads and gads of money versus going and trying to change the world and make a difference. What's your story? How did you get into this?
Funding Hope came out of is one of the good things that came out of COVID. And when that happened, before COVID, I was working on project development, rural development work in developing countries and in conflict zones. We are a for-profit company bringing solutions to some of the most challenging places on the earth: Afghanistan, Iraq, the West Bank, the Amazon, Southeast Asia, Africa. So as you can imagine, when that notice came down that everything was shutting down, my business went from 100 to zero in like 48 hours.
Wow.
We spent the next 90 days wrapping up projects, closing things down all around the world the best that we could. And I said, something's not right. We have to find a way to take what we've learned and what I've learned over the last years and bring some hope back into the communities here in America. So I started to look at what the challenges were in these disadvantaged and rural communities across America. And very often it came right back down to the same challenges we had in developing countries and conflict zones. There was a lack of hope because there was a lack of investment in these communities. So if we could find a way to bring investment back into these communities, we know we're going to make them stronger and help grow stronger communities from that. And that was the plan. That's where Funding Hope came from. It took me about a year to get that model set of what it was going to look like, looking at the competitive analysis, looking at what the opportunities were for it. And then I went out to start to raise the money and start the regulatory process, which took another year, twice as long as I expected, from there. And now we're ready to rock and roll and bring on issuers and investors and get them connected and get things moving from there. As founders now, things sometimes take longer. This took twice as long and costs twice as much to get going. But the rewarding fact of what we're doing, that's the overarching end of where it is. The money comes, we're going to build this, but putting money into the hands of the founders who need it most, that's what we really want to do here.
It's very noble and inspiring to hear. And I can just imagine, having gone through S1 registrations and regulatory filings and everything myself, it's just insane. So kudos to you for doing that. I'm curious, what's your plan to eventually go global? Like, is it just going to be the United States where you're going to focus? What's the ultimate long-term vision?
Yeah, no, actually, our vision is to get back into a lot of the communities and work with founders in the communities where we were working beforehand. So we've actually already formed a subsidiary business in Europe to be able to start the regulatory process in Europe to get our European crowdfunding service providers regulatory approval. That would then open us up all through Europe to be able to work with founders in disadvantaged and rural communities. We're going to keep that same momentum moving from there. But at the same time, European regulations right now allow for companies from other countries to actually come onto the platform and raise. So we'll be able to actually then help companies in Africa raise funds on our platform and go from there. In the meantime, we're happy to connect companies that aren't US based with other parties around the world that can be able to help them grow and raise funds.
Let's talk about how you're going to help founders, and just appreciate just being able to refer founders to you and send them your way to get some advice. I know it's tremendously appreciated. It's how we build community network effects. And you're coming on with us as a community advisor. I'm thinking you'd be helping founders in two areas. One, thinking about sustainability in terms of injecting that into their business, as well as the Reg CF, and either using your platform or any other platform. Tell me about how you want to help founders in those two areas.
Yeah, one of the things I really liked about Startups.com when I first started looking at it as myself is that peer interaction of being able to engage, being able to get support. You get support by giving support. So what I want to be able to do is help founders get prepared, help them build sustainable business models so that their business will have the opportunity to grow. And sustainable business models reaches beyond an environmental impact or zero carbon. It really is building that model of how your business is going to grow, what the scalability of it is, and how you're going to leave a good impact, a stronger impact when you're building your business and when you eventually sell your business from there. So what I want to do is to work with founders and really help guide them on a path to where they're going to have the most success in raising capital. It's no secret many of the founders on startups.com are looking for capital. Well, having been, and I don't like this word, having been and am a serial entrepreneur, and I've done this a number of times, I think I can lend some experience and knowledge back to them of what's worked for me and what has not worked for me. What's not worked for me maybe will work for them, but I want to be upfront with them about it because maybe they haven't gone through it yet and maybe they're not sure what to expect. So by being able to be that advisor, being able to be that support for them and help build interaction amongst a team of people and group of founders, I think it's going to help everybody go a lot farther. And that at the end of the day, that's what I want to leave.
Let's talk about how founders should be prepared when they come talk to you. Let's give some advice right now. First one, I want to raise money via Reg CF. Before I come talk to you, what are some things that you wish founders would consider so that you have a really productive conversation?
Yeah, I wish people would really, and founders would really look at Reg CF, go do their work about Reg CF, look at some case studies of companies that have been successful, especially companies within their sector or industry, of how they were successful of doing it. What did they do for marketing? How much did they of their raise did they put back into raising more funds? What did they have prepared for an introductory video? It's not just a product video that they need. They need a video that's going to appeal to investors. So they need to be able to come up with all of that together.
I think that if we're talking about Reg CF, you also have to be prepared to educate investors on Reg CF. You have to be prepared to start building that trust, because an accredited investor is sophisticated for a reason. There are a lot of rules, but less rules versus someone right off the street that sees an Instagram post and say, hey, invest in the latest drink company and you can get a piece of this. It's great. And there's that extra level of responsibility founders really need to consider.
Not only do we have to educate potential investors as a platform, the companies should be educating them. They should be educating them about their company, but they should be educating them about the risks that go into investing in a startup company. Many startup companies don't work out. Some do, and that's great. But the investors need to be aware of that. The investors need to understand the industry that you want them to invest in as well. One of the mistakes I've seen founders make often is that they automatically assume everybody knows everything about that sector or that industry. If they're new to it and an investor is new to it, even in a small dollar amount, they might just say, that's not going to be for me because I don't understand it. Educate those potential investors about what you do, what your differentiators are, what your unique value proposition is, how you're going to scale your business, grow your business, when are you going to need more money, how long is this runway that you're going to raise for now going to last you, and what are you going to do with it? Everybody wants to know what's going to happen after that, develop it from there. Education is a big part of it.
I see founders start to go down the sustainability route, maybe become a B Corp, something along those lines. because it just seems trendy and they think maybe it's an easier way to raise money. And they do things which I appreciate the intent, but it doesn't always come across the best way. We're donating 10% of everything or buy one, give one away to charity, etc. And I think that there's this whole similar thing that happens with greenwashing, where you just say, oh, we're going to be environmental. It's the same thing with impact and being socially responsible, corporate social responsibility. What would you say to that founder and how they should be thinking through? Do I even want to go down this route?
You really have to be transparent right from the beginning, and you have to be transparent and honest, and that's going to help build trust. And when you have the trust, then you have something that's going to be sustainable. You have to show long-term viability. Sustainable business models are designed to thrive over a long time, considering economic, environmental, social foundations, really understanding what things are, that they really need to be able to meet that market demand, see where the consumer's going. Is your product going to meet that need? It's not just giving back to saying, oh, I'm going to go give this money away, or we are net zero. Sooner or later, investors and the customers are going to see through that if it's not honest and it's not transparent from there. So really know what you're doing. And that's that building that sustainable business model right from the start. Working with founders to incorporate practices that reduce dependencies on finite resources, and mitigate the risks associated with environmental problems and challenges.
Let's go to the other side of the equation for a moment. And I'm sure you've experienced this. I find it fascinating that you're working for a for-profit organization that was in these developing countries. I see a lot of founders and they struggle. So they genuinely have the heart, they want to give back, and they figure out their business model, but they have a really hard time running it like a business, really hard time raising either investment or, even if you're a nonprofit, raising donations, because there's this focus on what's your administrative cost, and I'm not going to pay for admin, I'm only going to pay for impact and all that stuff. And so it really leaves them in a tough spot. A lot of them feel tremendously hopeless. They can't even afford to pay themselves to run the company that's going to make the impact. The investors have got some really weird views on what actually is sustainable for the founder themselves. If you had a founder and you're talking to them and they said, Dorian, I'm struggling with just making this work, and you really saw that they want to make that difference, they are that noble founder with that heart of gold, what advice do you give to that founder?
That's not a sustainable business model. They need to take a step back. They need to refocus. They need to retool to have a sustainable business model. As a founder, you can't wear yourself down to the bone trying to do good and not have yourself taken care of. Nobody should work for free. Everybody should be, their value is appreciated, and you really need to build that model that way. And if investors are coming to you, and even with the trend of investors wanting more environmental accountability, or what's the sustainability plan before I invest in the business, you have a founder an investor that doesn't seem right to you, don't just go jump at the money, because it's going to wear you out. You've got to actually find the right investors that understand the business model, and they understand that business model because you've provided them with the materials and the education they need to be able to make an investment in your business from there. But you can't, lack of a better term, you can't kill yourself trying to build your business. That shows that your business model isn't sustainable. And if you want to do good and you're building a for-profit business, you have to build profit into your business.
You said it perfectly. Build profit in your business. Dorian, I appreciate this. I just want to say personally, getting to know you has been a tremendous experience, and I appreciate how much generosity you've shown all our founders. I want to commit to you and just say to everybody listening out there, if you are planning to raise and you're going to work with Dorian, and you need help from us at Startups.com, you need help from me, my commitment is to support any founder that's raising hope, and then we can continue building this ecosystem together. The last word to you, Dorian, what would you like to say to all the founders that you know are going to be listening? What's your final words of encouragement?
And I'm really looking forward to working with founders. I'm really looking forward to discovering new innovations and new founders who really want to make a difference. And I really want to help them and be able to be a good advisor for them and connect them with the right people to help them achieve their goals.